Hey, welcome back, everybody, to today's Market Explained. We are here for our episode for the 18th of October. I'm your host, Brian Castle. I'm here with Mr. Chris Reardon.
Afternoon, everyone. Glad to be here. Glad to talk a little bit about the markets coming up in election season now.
Yeah,
Election
and
date, I should say.
excellent. And just by way of review, Chris is our Director of Development at FourStar Wealth Advisors, headquartered in Chicago, a national firm, and now in 21 states. And Chris is a native of Cleveland, loves his golden doodle puppy, and has 3 really young kids. So welcome. Welcome.
Thank you, Brian.
Excellent. And I'm the CEO, founder of FourStar Wealth Advisors, advisor to executive officers of companies, and also trustee of the Boy Scouts of America, and very involved in charity operations as well, in addition to running FourStar. So that's our story. Chris, why don't we start with the market? Where are we between all the major asset classes? What kind of movement have we seen since our last episode?
Yeah, we've seen a little bit of jostling, but not a huge. We haven't seen any major changes as far as asset classes moving up or down. But domestic equities is still holding that number one position. It's at 322 tally points, and that's actually -2 from the last podcast. So a slight. It's actually been kind of oscillating between around 320 and 324. So kind of between the last 3 or 4 months, it's been moving that way. International equities is still holding firm in that number 2 position. It actually gained 4 points from the last podcast and is at 244. So still in that firmly in that number 2, but still would have a ways to go to challenge for that number 1 position.
Mm-hmm.
Commodities is in the number 3 position. It's at 213. It gained 1 point from the last podcast. So it's kind of found its base, it seems like, right there, but it has drifted significantly further away from international equities. At one point, they were tied really in that number 2 position. Cash is in 4th, -2 from the last podcast at 132 tally points. Currencies is in 5th, -1 at 93 tally points. And fixed income is still dead last at 84 tally points and -1. So not a lot really going on in the bottom 3. It really hasn't. We haven't really seen too much of a jump there in anything. We've seen them kind of come off lows a little bit, but no significant moves there.
So, Chris, the story of these tally scores, we didn't see a lot of change, but one thing that's been consistent is that international number. It's been up there now. I think we're at our 8th month where it's been on either number 1 or 2, which is significant because we haven't seen them up there for a long time. And, what many investors will do is they, don't really see trends, and they're not watching numbers like we are. And then at the end of a good year, then they'll say, oh, it was a good year, I better buy some international. Of course, then that's when the fade happens, right? So, the history of investors moving into some of these subsectors, whether it be small caps, international, whatever, isn't very good. The idea is to catch those trends while they're happening. And this is the longest trend we've seen in almost 17 years for international stocks. There was a little rally in 2015. There was a little rally 2 years ago for a couple of months where it went up to one of the top 2 positions and fell down. But international has been sustained in that top 2 position now for 8 months. So it might actually be a real trend now.
Mm-hmm. Yeah, I mean, with other international countries obviously lowering their rates faster than the U.S. I mean, that does boost a little bit. That gives them a little bit of boost as far as exports, things like that. Goods are cheaper there. It's cheaper to travel over to Europe when we have that strong dollar. So even though we have lowered by 50 bips in the U.S., we're still kind of behind, if you will, what's going on over in Europe and other countries, especially in the middle in Asia Pacific as well. So, I think that's the tailwinds, if you will, that are behind international equities. So we'll see. I think, like you said, Brian, it's been one of those things. I think we've anticipated international equities to kind of either take over or kind of see that kind of have that nice pop. And in the past, it hasn't kind of fully come through, and there still are headwinds for that as far as geopolitical things. There's obviously a lot of tension globally on that front too.
Well, the one sense though, since they've been, the U.S. has been in charge for so long as far as equity market returns in dollar terms. It is a sense that obviously the American markets are more dynamic and much more efficient. than the European markets and some of the other world markets. But that could be changing a little bit. And of course, we're getting more regulation, and the European continent seems to be going in the other direction. So it's not that way forever, right? So maybe international is a good play for a certain amount of assets for an investor. So talk to your advisor about that, or talk to us about international investing. It might be time. And then the other thing I noticed, Chris, is that fixed income number is still way down there. Although we went through, the lowest reading was cash at only 26 points, and then fixed income got down to 43. Currencies were down there at 43 at one point, but still 85 is a really low number, and fixed income is down below 100 for a long time. And so even though rates are going down, fixed income still isn't doing all that well.
Yeah, we haven't really seen a big fixed income bull market yet. Obviously, the Fed just lowered rates, so that we're seeing a little bit of movement in the short term rates. But I think especially with these strong numbers and stuff, I think economic wise, things like that have come out as of late, there's still some uncertainty there. So I think that's why we're not seeing that fixed income move maybe as quickly as some would anticipate.
Exactly. Well, anyway, that's where we are. Chris, where else are we on the markets?
Yeah. Well, one thing I want to kind of highlight is, we've seen, for the most part, earnings have continued to remain relatively strong. We certainly have seen some misses. We're entering kind of the Q3 earnings, or we're in Q4 now, reporting on Q3. And the latest one I'll highlight is Netflix just came out, and their shares actually hit an all-time high as they reported robust earnings. They topped their estimates for quarterly subscriber additions by more than 1 million. And part of their earning projections are factoring in price increases coming down the line, and then obviously their addition of the ad-supported tier subscription. So we're starting to see some kind of differences. There we're starting to see some movements and some winners and losers, if you will. The bank earnings came out last week, and those, for the most part, I think kind of 75% of them, if you will, were beat expectations as well. So this points in some cases to a stronger economy right now. That doesn't mean it's, could be weakening. We could be on the precipice of it. But what that does say is, did the Fed maybe cut too early? If the economy continues to be really strong, is there a reason to cut rates? So it just kind of puts that movement really into question, I would say.
It does. Well, good. There were some other announcements in the markets, and we did see very quietly a federal judge declared that Google is a monopoly, and based on all the clauses of monopolistic competition or monopolies in America, they said they're a monopoly. Now, the U.S. Justice Department is weighing a possible breakup of Google. And, there's certain ad markets, for example, and the search markets, they dominate. They're in like 90% of the market. And that it's been that way for a while, though. It seems like it's taken them way too long to figure that out. But obviously, that could change things a lot. The Google company is very, very powerful and is dominating some industries. And some of it's for good. But whenever a monopoly gets in, there's some abuses from a company like that. Certainly, there has been free speech issues when many of the folks that work for Google are of one particular persuasion, and they've been suppressing speech for people they don't agree with and stuff like that. So there's got to be some changes there. They've been dominating, and so we'll see what they do. So Google's going to get broken up, and everybody who was around back in the 80s remembers when the breakup of AT&T happened and ended up with like 30 different companies at one point before they all consolidated again. So we'll see what happens to Google. And then also, Chris, Rio Tinto agreed to buy Arcadium Lithium, which is the largest U.S. producer of lithium, signaling the miner's drive to enhance its position, an anticipated jump in world electric vehicle demand. So right now, electric vehicle demand is slowing in America, but as a long-term position, that's kind of what they're playing it for. So they think demand will come back, and certainly electric vehicles in other countries, even if the U.S. is slower. So there's opportunities there. So I thought that was very interesting. And then also there's been some resurgence in desire for power, and power through nuclear power. Nuclear obviously got very discredited back in the 70s with 3 Mile Island and other meltdowns in Ukraine of big nuclear plants. But now they think it's worth the risk that we have to get more power. We just need more power for all these AI machines and everything. So that's a big trend, and that's happening. So the uranium stocks are running, and there's other ways to invest in private companies and in nuclear power. So that's a big trend that we see too.
Yep. Yeah, and then one thing I'll add to that, it's interesting because you're seeing a lot of these tech companies are actually going and making deals with these nuclear power companies. I believe it was Amazon who signed a agreement with it was Camco, for hey, they're going to buy at a certain rate for the next 10 years, things like this. So we're seeing them kind of thinking ahead as far as the power requirements, as Brian said, for AI. And I believe recently they just turned on, if you guys remember, that it might be scary to some, but 3 Mile Island, they just turned on one of the reactors, which was previously turned off just because demand wasn't there. It's not obviously the reactor that had the meltdown situation. There were two other ones, but they turned off. They kind of shut them down. They're staged to shut them down due to the waning demand for nuclear. And now they're turning that one back on, and they projected out, I believe, in a couple of years to turn the second one back on. So we're starting to see a little bit of a reversal with nuclear as far as certain plants were projected to be decommissioned or things like that, and that's kind of being forestalled and might eventually just turn around and kind of keep them going.
Yeah, exactly. Well, okay, those are some of the trends that we see, at least in the markets, and we're hitting new highs, Chris. And we'll see. Normally, we don't see the Fed lowering rates in a period of time when we're at new highs. So they must be playing for what they think is a pretty bad recession that was going to come, or trying to forestall that. But it's certainly a very different circumstance than we're used to seeing. The Fed is lowering rates right now. So if that trend continues, let's turn to the economy, Chris. There's a lot of numbers there too.
Yep. Yeah, we've had a lot of numbers since the last podcast. So I guess first one I'll highlight, U.S. retail sales came out. They were actually up 0.4% in September from the month earlier. And that was actually an acceleration from the August read of 0.1% month over month. So, it's interesting. We continue to see the consumer spending, and we continue to see that the power behind the consumer there. So a lot of people at this point really anticipated kind of even waning off kind of July, August, and really September, especially to see those retail sales start to really pull back. And we haven't seen it yet. So I know there's been concerns over credit card usage, things like that. That could rear its head, and that could be kind of a landmine. But for right now, the consumer continues to kind of propel the economy forward. On the next thing, the University of Michigan's consumer sentiment came out. It actually declined to 68.9 in its mid-October reading, and that was down from 70.1 at the end of September. So, obviously consumers starting to, the sentiment-wise, wane a little bit. I think a lot of that is just this continued feeling of inflation. Personally as a consumer, you're hearing prices are coming down. Oh, inflation's coming down. We've beat inflation. You're hearing this, but that's not being reflected when you go and do your grocery shop and things like that. And we've pointed this out on there. It's important to note, just because inflation's coming down now, that's just the slowing of future inflation, if you will. That doesn't retroactively, remove the 9-10% high inflation we had. So the prices that were high are here to stay unless we get a deflationary environment, which is actually worse. So we don't necessarily want to see that for the U.S. economy, but it's important to note. So that shock, I think, that the consumer feels isn't going away anytime soon.
Yes.
The next thing I'll note, this was a big number. The employment, the non-farm payrolls came out. They had 254,000 jobs last month. That was way above the expectation, which was 150,000, and the largest monthly increase since March. So on top of that, the unemployment rate slipped to 4.1%. And the biggest, gains for this hiring were bars and restaurants. So that kind of I think points once again to that retail sales, that spending that the consumer is doing. I think you still have the consumer going out to restaurants, you have them traveling, you still have this environment. Construction was right up there. And then you had the government, education, and healthcare. It was still a pretty good spender. I think government was up about 31,000, part of that number, which was an increase. So we are seeing a slight increase there as well. But on top of that, we had an revised upward number for July. Non-farm payrolls was actually revised up 55,000, and August was revised up 17,000. So, the economy picture that's being painted for the most part right now is still pretty strong, and some would say very strong, which once again, I think really points to what Brian said. Why do we lower 50 basis points if the economy is really firing on all cylinders, which most of these would point to. Couple other things I'll note: the U.S. Producers Price Index, the PPI, was unchanged month over month in September, so it came in at 0.2%, which was the same as August. And that was below the expectations, which was people were anticipating a 0.1% increase. So slightly better than expected there. As far as producers price index, that's important because that's usually a leading indicator on the CPI, or what the consumer price index is. Because if the producer prices are going up, usually that gets reflected onto the consumer. The US CPI, consumer price index, rose 2.4% in September. It's a year-over-year number. That was down 0.1% from August, which was good. But that was above the expectations of economists, which was they were expecting a 2.3% read there. I think the important thing to note from that CPI read is the core prices. So core CPI actually excludes food and energy. That climbed 3.3%, which was actually up slightly from the August read of 3.2%. So that actually moved upwards 0.1% month over month. So we continue to see that core CPI be persistent. And that's really interesting to note. The two last things I'll highlight, I think these are, really interesting and it's really reflected on the rate cut we saw in September. So even though the Federal Reserve cut rates in September, this has really had little impact on the mortgage rates since the rate cut. And we've actually seen the 30-year mortgage rate rise since the Federal Reserve cut rates. So on the week ending before the rate cut, before the September rate cut, the 30-year fixed mortgage was on an average of 6.09% for a 30-year fixed. The latest reading, this is as of, let's say, mid-October, the 30-year fixed mortgage is actually 6.12%. So, a lot of people are anticipating, the Fed's going to lower rates. That's going to free up the housing market. We're going to see this big boom. We haven't seen that really come into play yet. And a lot of that has to do with the fact that when they lower rates, like the Federal Reserve did, that's lowering the short-term rates. 30 years is obviously more in the long term, as far as, fixed rates and fixed income goes. So we don't see that get, directly reflected necessarily in the mortgage rate environment. A lot of that has to do with the bond market's interpretation as far as where rates will be. And I think with these stronger economic numbers we just kind of went through, people are doubting, will the Federal Reserve cut rates as aggressively as maybe people are anticipating, maybe before the rate cuts. I think, before that 50 basis point rate cut, people were anticipating weaker economic numbers, things like that. And now that more data is coming out, we're seeing actually edge higher as people are backing out maybe some of the rate cuts they were originally hoping for, anticipating. And the last little bit that I will cover, that I think is interesting, is higher home prices actually forcing builders to offer mortgage buy down. So, we're not seeing that pullback with that 50 basis point in the mortgage rates. So builders are actually offering a mortgage product that lowers the mortgage rates to a kind of ballpark 4% for the first year and a 5% for the remainder on a 30-year mortgage. That's obviously a drastic difference between the market rate of called 6.12%. So effectively, the builders are kind of eating the difference on that just to be able to attract buyers, because as we've seen with the existing home sales, these high home prices and high mortgage rates are really crowding out a lot of the market because people just can't afford to pay those mortgages.
Yes. So they're stepping in to modify that. So it makes people feel more comfortable. Math wise, it's not that big of a difference really, but that headline rate is not great.
Yeah, yeah. I mean, I think they're covering that difference. So if they could be able to go out and lend, let's say, for 6.12% to this home buyer of their new construction. A lot of these home builders might have their own internal mortgage company or things like that, and so or a subsidiary, um, and so they're willing to, like you said, Brian, eat that difference there to kind of be able to offer better rates and sell the homes.
Well, that's interesting because something did have to give with the whole market kind of tied up and not much going on. They had to get something to get things moving.
Yep. Yeah. I mean, I think it's important to note. And I think at some point, something has to give on that front. So we'll see. I mean, we don't really know where things are going to be. I think it points to the fact though that you still have this strong market right now, and you still have, as we haven't really seen this decrease in spending. We haven't seen a lot of decreases that you would anticipate in a recessionary environment that will hopefully drive down demand, and that'll bring down prices, bring down interest rates, things like that we want to see, and that's what the Federal Reserve wants to do. I really haven't seen that yet, so that could point to higher interest rates. We don't really know. Higher inflation coming back. There's a lot of potential consequences from that.
Absolutely. Well, and a lot of this has led to a gold surge and an oil pullback, right, Chris?
Yeah, yeah. I mean, gold recently, just as of I think today, right now. So this is October 18th. Actually broke above its historic threshold of $2,700, $2,700 per ounce. A lot of that was escalating tensions in the Middle East. We continue to have Israel and Iran, and obviously their proxies, Hamas and all them. So we have that global tensions. We have the uncertainties around the approaching U.S. elections, and then right now the tailwinds are there for gold because the global economy really is trending towards a more relaxed monetary environment. So we've really seen gold be the major benefit from that. Not only just that relaxed environment, but also you have the volatility from the U.S. elections and just the geopolitics, I think, are really benefiting that. And then oil on the flip side of it, got a nice pop kind of early October and late September. But now we're starting to see a little bit more of the data flow out from China and the stimulus. So the pop from oil came really from this Chinese stimulus, the expectation that this was really going to be this very large stimulus. It was going to prop up the Chinese market. There are going to be buyers again. And there was some substance behind there, but I think the concerns still loom, and we're really seeing that be reflected in the oil price. And we're seeing about a 7% pullback now as we continue to see China's economic growth is still persistent and declining. And then the last international thing I'll note kind of on top of that is Japan's consumer prices actually rose 2.5% in September from a year earlier. So that continued the slowing. That was a slowdown from the August reading of 3%. So really interesting there that we're seeing a deflationary, if you will, almost environment. We're seeing those prices come down. It's not deflationary yet. It's just a decrease in the inflation. But Japan's on a very different note than what the U.S. wants. They actually want to fight that. So that's important to note because as we saw with the reverse carry trade in August, that could play havoc in the U.S. markets and global markets, what Japan does there. So if the Bank of Japan comes in and decides to raise interest rates again, we could see that be reflected. So it's really important to note, even though we don't talk as much about Japan, it does have, I think, a material impact on the overall global market, especially with there's still a lot of people invested in those reverse carry trades.
Absolutely. Well, it's interesting to see gold surge, Chris, because we did for years and years see gold as the safety investment when the economy is weird and the currency is in question, and so gold was always where people went to. Back in the 70s, gold was very popular. Then Bitcoin, which is another commodity, came out, and so Bitcoin has taken a lot of the luster away from gold. So Bitcoin was hitting new highs. Well, then gold actually hadn't done much for almost a decade. Now gold is actually running again near new highs, and at highs and near new highs. And now Bitcoin is also. So now they're both running as people are worried about the dollar. They're worried about the deficits. We're up to almost 36 trillion in debt. We've never seen anything like that before. And, the federal government is believed to have upwards of 100 trillion in assets. And, what if an American president or Congress were to sell 10 or 20 trillion worth of land, right? Then maybe they could pay down that debt. That's one proposal that a number of folks are discussing. And we've heard the former President Trump talk a little bit about that. We haven't heard that from the other camp, but that is talked by a lot of different politicians that maybe we need to pay down some of that debt because it's just as existential. It's a huge problem. Probably why we're seeing gold and Bitcoin both run, don't you think?
Yeah, I mean, 100%. I mean, I think, and once again, I think that just leads to the tailwinds that I spoke about earlier. I think one interesting framework I heard, it kind of flipped its head a little bit. My thought with gold is, in the US dollar is so strong, it's a reserve currency. So we think about gold in terms of the US dollar, 2,700 per ounce. But a lot of the world thinks about gold as kind of the reserve currency. So it's not necessarily that the dollar weakening or gold gaining 2,700, it's the reciprocal. So how many dollars can I buy with this ounce of gold? And that think about, gold as really the measurement of value, and that the dollar is weakening in proportion to that gold. So there is some meaning to that, but I think it frameworks it interestingly because we're in the U.S. here, we are biased, and we have those to a degree biases. We don't know what India, what some other countries, China, especially some of these heavy buyers of gold, they put more value in that hard commodity.
Yeah. Well, we'll see what happens. We have an election coming up, I believe, in 20 days, and then we'll have some clarity on who's going to run the government. We'll see what they do. So I think that's it for the economy, Chris.
Mhm.
What we see out there, there is an interesting situation that's developed where for a number of years, the politicians were trying to say that crime was actually down. Turns out they very quietly, without much fanfare and without a press conference, announced that the crime statistics are actually not only not down, they're up, and they're up significant, up 4%. But they came out with that release without really saying anything, just released it. And so a lot of people didn't catch it. It hasn't been discussed. And it makes people feel like they're trying to hide it, right? Especially because that's been used in politics a lot in this election campaign. No, crime's actually down, crime is down, crime is down. It's actually up now. And so they're admitting that. And that was different ways that they're accepting government data. I mention this because some people are always concerned about the credible issue of all of our economic data. And we've been seeing revisions downward in employment numbers. Now we saw a huge one, a 30% decline, a revision downward. And all the revisions are downward, right? So the numbers come out big and the numbers look good and they're better for employment and for the economy, but all the revisions have been down in a way that's statistically not credible. There should be some revisions up, not down, right? In employment numbers and things like that. So there's still some question about that. And I think hopefully the next administration will do some investigation on how those numbers are put out. If it was statistically credible, there would be both revisions both ways. But we never see that. We only see revisions down and not up. So the crime statistic thing now has shed some more light on that issue. Are we getting credible numbers from the government? We just may not be. So more on that hopefully in the future, Chris.
Mhm.
On the good note, though, M&M M&M's is coming out with peanut butter and jelly M&Ms for the Christmas season. So that's good news. I wanted to announce that to everybody. What do you see out there, Chris?
Yeah, I mean, I think one of the cool things that you saw and made big headlines is SpaceX, which I mean, the historic leaps that they've made in the last decade has just, been drastic. I mean, it's been game changing. They had a historic launch where they launched their heavy booster rocket, launched payloads into space. And then the heavy booster actually came back down to Earth, re-entered the atmosphere, fired its booster, or at least I think half the engines or a small portion, and was actually slowed down enough and stopped and kind of like if you think chopsticks, I think I've seen it referred to, these big heavy metal arms caught the booster. So, that's really important. That's the heavy booster that's going to be taking, the plan is to take astronauts back to the moon. And if we have that heavy booster, we're able to reuse it 10 times, 15 times. That really is just going to accelerate the capabilities of space travel, traveling to the moon, traveling further out into the solar system. So, huge, huge breakthrough there. And then the last little thing I'll note, recently, I was actually in Arizona, and one thing I noticed is they have these Waymo driverless cabs. And me and my wife were calling an Uber one evening, and they actually asked me, actually kind of on the app prompted me, we have a Waymo driverless car. Do you do you want to be picked up by one of these? And I will say, technology is very, very cool. I know Scottsdale, kind of Phoenix area is one of their test markets, but just incredible. This car pulls up. There's no one in the driver's seat. You can see it kind of navigating on the streets, and talks with other Uber drivers. They said, a year ago, these cars were like, the driver's ed, kind of very, very cautious. And now they're learning with the AI so quickly, you wouldn't even notice that they're different from any driver. You wouldn't think that they're a robot. So really cool, really interesting in the test markets there.
Fascinating. Well, great, Chris. I think we're coming to the end here. Thanks, Chris. I wanted to point out one of the most active posts that we put out on the Leadership Matrix, which is the blog that corresponds with the show, is our healthy eating post, where we had interviews with RFK, interviews with the Casey and Kelly Means, the top writers on the whole subject of health and healthy eating. America's obese, a lot of issues of people trying to lose weight, new weight loss drugs. So that's a really important subject. So have a look at that. That's been one of the biggest ones. And then also look out for everybody for our episode on oil. We're going to interview two oil men who are doing oil projects. A lot of folks are investing in oil projects now. There's tax benefits to do that. So I'm going to do an oil men episode. And the next episode will come out very shortly after this episode. So look for that. And I think that's all we have for today, Chris.
Yeah, I think that about covers it. And the podcast kind of mid-October leading up to the election.
Excellent. Well, thanks everybody for being with us. I will be back again with another episode. Watch for the Oil Man episode, and then we'll do a market commentary in a couple of weeks, everybody. Thanks, and let's pray for a good election. All right. Take care, everybody. Bye-bye now.